We're going to go. Very good. Okay, folks. Again, I'm Tim Williams. I know most of you, so good to see you again. Back for another year, and this year we're going to be changing 2 of our 4 insurance companies that we deal with for our employee benefits. The first one I'll start with is Lincoln. We're going to be going back to Lincoln for our life and our disability insurance. So if you want to go ahead and grab their paperwork, their benefit summaries. So on the life insurance, we have an employer-paid benefit of $30,000 life insurance on all employees here. That's employer-paid. Basically, it's pretty simple. If you die while employed here, your beneficiary would receive $30,000. If you were to die in an accident while employed here, your beneficiary would receive $60,000. And again, that's employer paid, so that's a good thing. So then I move on to the disability insurance, also employer paid, and that's not changing either. The benefit there is 60% of your weekly salary up to $1,000 maximum. The benefit would start on the first day if you were involved in an accident, and it would start on the 15th day if you had a sickness that caused your disability. And the maximum benefit period is 24 weeks. Okay? Okay, and then we have the voluntary life insurance. And again, this is not changing either. But one thing is changing regarding the voluntary life insurance, and that is anyone that currently has voluntary life insurance, you will be able to just continue that amount with Lincoln. And you'll want to put that on your form, and then we're going to do a spreadsheet at the end, and that'll be needed to be included. However, if you do not have voluntary life insurance because you've declined it, you do have an option to get it again now during this open enrollment. Okay, so it's like a one-time deal. Whenever you change insurance carriers, they always offer a true open enrollment, which means everybody has the option to get the insurance, the life insurance. For the employee, you can get up to 5 times your annual earnings. They come in increments of $10,000, and you can go up to 5 times your earnings to a maximum of $300,000. However, the guarantee issue amount, and the guarantee issue amount is the amount that they will give you with no health questions asked. That is $150,000. So that's what you can get right now with no questions asked. If you wanted more than $150,000, you can request it, apply for it, and then they'll send you a form, have you fill out health questions, and they will approve you if they find you insurable for the additional amount. Okay? And then you have the option to insure your spouse for life insurance as well. Those are in increments of $5,000, not to exceed $100,000 for your spouse. And for your spouse, the guarantee issue maximum is $30,000. Okay, so that's the amount you can get on your spouse with no questions asked. The rates are the same as they are now, so that's pretty convenient. And then also on the children, your dependent children, the options there are $5,000 or $10,000. That would cover all your eligible children up to 19 years. And the amounts there, again, are $5,000 or $10,000 for the voluntary life for children. So there's a couple of other items that just shows, well, it just basically goes over what I just said here on these other pages. And then there should be a page where they show the premium amounts based on age brackets. Okay, so if you wanted to do it, you would, and we can help you with this, you would just look to see what your age bracket is, and then the amount, and then you would just multiply it by the rate shown in those columns. Now again, on the voluntary life, it does offer as well accidental death and dismemberment. Okay, so Just like I said before on the employer paid for life insurance benefit, under voluntary life, if you wanted to get $100,000 of voluntary life insurance, that's going to cover you for life insurance. That will not cover you for accidental death and dismemberment. If you were to die in an accident, then you would just get the $100,000. But if you get the accidental death and dismemberment, which is just 2 cents more, then it would pay double if you die in an accident. Okay? Hopefully that's all pretty straightforward and you're aware of it. And that's pretty much all there is on the life and disability portion. Okay.
Everybody needs to fill out a form.
Yep.
Waiving it or taking it.
Correct. Again, yep, correct. And from that, she's going to generate the spreadsheet and we'll get it submitted. Yep. Okay? All right, so then we're going to let's switch over. We'll talk about health insurance now. Health insurance is going to be switching from Medical Mutual to Aetna. Okay? Aetna gave us best proposal, so here we are. The plans that Aetna is offering, one significant change this year is they're offering one additional plan. Okay, so instead of 2 plans, we're offering 3 plans this year. And I'll get into the whys about that in a moment. But let me just start by saying that the HSA that we currently have is basically duplicated under Aetna in terms of the benefits. You have a $5,000 deductible, $6,650 out of pocket, and I think anyone that's under the HSA knows that outside of preventive care, which is covered at 100%, all diagnostic or illness-related health care has to go to the deductible first. Okay, because that's the definition of the HSA. It's a high qualified, high deductible health plan. So anyone that has that knows that's what's going on, and that gives you the option to set aside monies into your HSA account. Okay, so for 2022, an individual can contribute $3,650 to their HSA, or $7,300 for a family into their HSA. Okay, and again, $5,000 deductible, $6,650 out of pocket, and everything goes to the deductible before you get any benefits under that plan. Okay, and then we have what we call the PPO or the buy-up plan that we've offered for years alongside the HSA. That plan as well is very close in benefits to what we currently have. Primary care physician office visit copay, $30. Specialist office visit copay is $60. Those are the same as we have now. The deductible is $5,000 per individual, $10,000 per family. That's the same. The insured percentage is 80% after you meet the deductible. That hasn't changed. Emergency room copay is $350. That did not change. The Aetna plan has one enhancement. The urgent care copay is $50, whereas the current copay under Medical Mutual is $75. The out-of-pocket in the worst-case scenario did not change. $7,350 for the year for individual, $14,700 for family. One change on that is that the drug copays, those did increase, okay? So for generic, it's $10 copay currently, and it's going to be $10 copay under Aetna as well. But on the formulary brand name, we currently have a $40 copay. That's going to increase to $50 copay, okay? And on the non-formulary brand, we currently have a $70 copay. That's going to increase to $90. So that's a bit of an increase. However, that's what we had to do in order to get these plans to work. They could not modify those, even though I asked them to do that twice. Okay? So that is the buy-up plan. Now, they're offering a third plan this year. Okay, we are offering a third plan this year. And we're offering this plan because Aetna made it available to us and quoted it, and the rates are really good and the benefits are really good. We're calling it a hybrid plan because it's kind of in between an HSA where everything has to go to the deductible first and the PPO copay plan where you have copays for most of the procedures. This plan offers copays for 5 benefits, okay? One is the primary care physician office visit copay. It's $40 copay under this plan. Okay, for a specialist, you still have to meet the deductible. Under this plan, the copays they're offering are primarily for the lower level health care in terms of basically primary care. So it's $40 copay for primary care. The deductible is $5,000. That did not change. That's the same as your HSA deductible, as well as the copay buy-up plan that we currently offer. Okay? It's an 80% plan, just like the current plans are for HSA and the buy-up PPO. There's an urgent care copay of $50, which is very good, and the out-of-pocket amount is $6,600, which is less than the current HSA out-of-pocket, and it's less than even the buy-up plan out-of-pocket, which is $7,350. Now let me get to this. Just bear with me here for just a second, and there we go. That right there. Okay, so preventive care under all these plans, again, is covered at no charge. Okay, so that's by Affordable Care Act law, where everybody can get physicals for free once every 12 months. Okay, so another thing that I noticed on all these plans is that they do cover, under their preventive care, one routine eye exam. Covered at 100%, the deductible is waived. Now, we have a separate vision plan, but I thought I would just mention it since it's on page 2 of most of these benefit summaries, that one routine eye exam can be covered under the Aetna plan. So I'm not sure, you have to be in network to get that, but just thought I'd mention that as well. So they also have walk-in clinics as part of the 5 primary care copay benefits. Unfortunately, I don't think we have any CVS Minute clinics in this area, and we don't have them in Athens either. So unless you're in Columbus or Cincinnati or a metropolitan area, you really can't take advantage of that one. But otherwise, everything else under this plan is covered just like under the HSA and the buy-up. If you need major services, diagnostic testing, if you're going to be hospitalized, the deductible is going to apply, and the co-insurance comes in after, the 20% comes in after you hit your deductible until you meet your out-of-pocket. But a key factor with this plan is, do they have the rate sheets? Yeah. You'll notice the premiums for this plan that offers these copays is just a little bit less than the HSA plan. So that gives you, that's something to consider. And yes, so the premiums are a little bit less than the HSA. Now, I do also want to mention, anybody that's in an HSA now, you may or may not be contributing to the HSA account, but if you were to switch over to this plan that has the copays, you can no longer contribute to your health savings account for this year. Now, if you have monies that are accrued in that health savings account, you can still use those to pay for your health care benefits under this plan, but you can't contribute to the HSA because you're no longer covered under a qualified high deductible plan, which you have to be in order to contribute to the HSA. So, let me just take a quick look here. Okay, so that really is the summary on the health insurance plans. Yeah, go ahead.
Also on that hybrid plan for
Yep.
generic prescriptions.
Yes.
They're covered at $10, they're not subject to that deductible. So if you get the hybrid plan and you get a generic prescription filled, it'll just be $10. It won't be subject to that deductible. And then also, you want to talk about the maintenance medications?
Yep, sorry, let's do that. Yep, the maintenance medications. Okay, so on maintenance medications under Aetna, they have a little provision in here which says, okay, so you folks know what maintenance medications are, right? High blood pressure or cholesterol. So you're going to be taking that every day pretty much. So it says after 2 retail fills, members are required to fill a 90-day supply of maintenance drugs at CVS Caremark mail service pharmacy. Okay? Otherwise, the member will be responsible for 100% of the cost share. Now, cost share, I've asked them for clarification on what that means, but they also are giving you, there's a section right below it that says opt-out. The member must notify us of whether they want to continue to fill at a network retail pharmacy by calling the number on the member ID card. So, couple things here. On maintenance drugs, hopefully everybody is, if you're on them, you're okay with a mail order program. You do save a little bit of money being on the mail order program. For example, if you're on a generic drug, you have a $10 copay, but mail order, you can get a 90-day supply for $25. So you're saving $5 in that scenario instead of going to pick it up every month at the pharmacy. So if you're okay with the mail order program, that's going to be the easiest, most convenient, and it's going to be the less costly as well. Now, I told that, and it seems a little bit petty in my opinion that, you know, they would give you the option to opt out of the mandate to go through the mail order pharmacy. But you have to call in to do that. I mean, I don't understand. It just seems kind of petty to me. However, that's what this says. So everybody has to know that if you're on a maintenance medication and you want to go pick those up at the drugstore, after the second one, they're going to tell you, hey, your cost is going to go up to whatever the cost of the drug is, because you didn't, if you haven't called them to opt out, number one, or just sign up for the mail order pharmacy. Okay?
So what are you opting out of?
You're opting out of the requirement to go through the mail order pharmacy in that situation.
You have the option to opt out?
Yeah, but you have to call them to do that.
And then you would still pay the same?
Correct.
Weird.
Yeah, it is. It's. I mean, I'd agree. It's weird. Yeah. Now, on the drugs, you know, so these insurance companies all have their own formularies, and they're not the same. So you have to check to see where your drug falls in terms of which category to see what the benefit's going to be under the copay plans. Under the SJ plan, again, the only copay that you could possibly get is if it's a generic drug. If you're on the buy-up plan, which I think most people in here are on the buy-up plan, then you have 3 different levels of copays, and you would want to look to find out where your drug falls to find out what the copay will be for 2022.
Tammy, I want to mention about the pharmacies, because you can go to whatever pharmacy you want, but you just want to check the price. Obviously, Aetna's owned by CVS.
Yeah.
So if you go to CVS, you probably
Right. Correct.
that's low.
Yeah.
Also, one more thing, on diabetic supplies, they have a list of, and there's certain supply places that you can get your supplies for 100% covered. So I have a list of those, so at no cost to you.
So like right now, mine comes from Edge Park, if I don't pay anything for it. My needles.
Yeah.
Hopefully it's going to stay the same, and that would be if it's in those first 2 categories. Yeah. Okay? All All right, so I'm just going to briefly mention, so the dental insurance is going to remain with Superior Dental, okay? Hopefully you folks haven't, had any problems with that. Primarily, I'll just, a brief overview is that preventive care is paid at 100% on dental with no deductible. Basic is covered at 80%. And basic is primarily fillings, but there could be others. And then the major items like crowns are going to be covered at 50%. And there's a $1,000 calendar year maximum per member. And there's a $50 deductible for basic and major services. It also covers orthodontia for children, 50% to $1,000 lifetime on the dental. And on the vision, we're going to remain with MetLife. Okay, and so MetLife has $10 copay for an exam, 1 per year, and you can get lenses at $10 copay once a year as well. And frames is a $10. Frames is once every 24 months for the frames. And again, that's through MetLife. So, there's the page I wanted to talk about. The premium for the SJ plan, if you would consider going from the buy-up plan to the SJ plan, you would lose some copays. Obviously, for a specialist is the primary copay that you're going to lose, and for a hospital emergency room. But the premiums are significantly less under the SJ plan. For a family, my calculations were $2,870 less if you were to switch from the buy-up plan to the SJ plan. And to do that, what you're giving up primarily is just copays for specialists, of which there are a lot of specialists out there that you may be using. And then the emergency room is the other copay that you would lose under going from the buy-up plan to the SJ plan. So, and for a single coverage, it's just under $1,968 less. Employee spouse, $2,109 less. Employee children, $1,728 savings to go from the buy-up to the SJ plan. Okay? Okay, so that's pretty much all I have unless you have questions, and then otherwise we do need the forms back. I think we said by Monday on that, right? Forms back because we're a little bit late this year. We have to get this processed and rolled. Of course, the goal is, I think we can still meet it, is to have everybody in Aetna's system and in Lincoln's system, but Aetna is more important because that's health insurance. People may need prescriptions right away. So we need to get that submitted, and hopefully Aetna knows we're in the system. They know all our names and the corporate name by January 1st.